And as with every other shock we've had in the past to this market, it just keeping on with a ton of great people kind of rallying to do new ideas and have creative structures and keep that housing built. But with every shock, it just seems deals get more expensive and longer timelines keep getting put on us. And so, the production slows down, but it keeps happening.
Welcome to BuzzHouse, a Baker Tilly podcast where you can hear all the buzz around multifamily housing, with all the info you need to help you win now and anticipate tomorrow. Hi, I'm Don Bernards, the partner in charge of Baker Tilly's multifamily housing practice.
And I'm Garrick Gibson, a partner at Baker Tilly, also specializing in consulting on multifamily housing transactions across the country.
Let's get started. Garrick and I know many of our listeners as well, always enjoy getting an update on what's going out there in the loan housing tax credit equity market and so forth, maybe a little bit of debt as well. It seems like there are always macroeconomic conditions affecting the LIHTC space. Very excited today to have our guest in the BuzzHouse be our good friend from U.S. Bank, Vihar Sheth. Vihar is the managing director of affordable housing at U.S. Bancorp Impact Finance. He's responsible for the origination, underwriting, closing, and management of direct LIHTC investments and construction loans, as well as multi-investor fund executions. We'll be talking with Vihar about various LIHTC market-driven opportunities and challenges. We're really excited to jump into it, so I'm going to turn over to Garrick to get into our conversation. Garrick?
Thanks for that introduction, John, and thank you for being on BuzzHouse, Vihar. So before we jump in with some questions, why don't you go ahead and give our listeners some insight into your background and your work with U.S. Bancorp Impact Finance?
Yeah, sure thing. And thanks for having me, guys. I really appreciate the opportunity. As Don said, my name is Vihar Sheth. I'm the managing director of our affordable housing platform at U.S. Bancorp Impact Finance. I've had that role since May of 2002, though I have been in Impact Finance almost 20 years now. So a long, long time ago, I started underwriting LIHTC and historic deals. Those are the only credits kicking around at the time. I stayed on the housing space and grew my career as an underwriter and then an originator. And then I was managing the originations team for almost a decade before taking on this new role. I have a degree in engineering and an MBA and was really attracted to the community development space fortuitously. And then I met Don Bernards on a dance floor many years ago, and I have not been able to get out of the space at all. So I'm still here and kicking and loving it.
Thank you very much for that. Yeah, maybe just a little bit even about U.S. Bancorp Impact Finance. Like, what is your, I don't know if you know off the cuff, your volume or what's your general appetite in the market?
Yeah, a little bit about Impact Finance. We're a wholly owned subsidiary of U.S. Bank. We used to be called a Community Development Corporation and repositioned ourselves earlier this year to kind of capture more of what we're doing beyond the capital deployment in our various tax credit spaces. We have tons of initiatives underway and building great teams in the ESG space, the racial equity space, doing more impact work. And it's not always about deals. It's about partnerships and how we show up in the community. And that was kind of the basis behind the repositioning. I have the great pleasure of leading one of our tax credit lines. I have peers who manage our community finance solutions, which incorporates new markets and historic tax credits and CDFI lending and private equity. We also have environmental finance space that is one of the largest in the country as well, doing renewable energy investments and lending. We also work in syndications. We have a very strong deposit group as well, and those are all within the Impact Finance umbrella.
Yeah, you mentioned renewable, and early on you mentioned that when you got into this, it was just LIHTC credits. So yeah. Good segue, right? Because with the passing of this Inflation Reduction Act, there's obviously some notable improvements in some of these energy efficiency or renewable energy type investment credits that are paired with LIHTC, whether it be not eliminating the basis reduction for the Section 42 basis to kind of maximize credits. Are you seeing a lot of these IRA credits in any of your recent deals that you're working on?
Yeah, the short answer is yeah. The long answer is a little bit more complicated, right? It's with any new legislation, you got the devil's in the details, and that's more true in our industry maybe than most. And so some developers are caught by surprise and evaluated whether or not kind of midstream putting these 45L credits on their deals would make sense. Some have opted in, some have opted out at this point. I think the investor appetite is a little bit mixed, so we're trying to play that out as well. We're very interested anytime multiple credits can be used together and the sum is greater than the parts. And so I think in general, this is a great thing. And we'll see some of the details and requirements get worked out here. And as new deals are put together from the ideation stage and a developer can contemplate having this as a piece of their financing source, I think we'll see it more often.
Perfect.
Well, and just another little side note to that. So on the investment tax credits, like for instance, like the solar, et cetera, now that that new IRA allows you to transfer those off in a one-time transfer, if not purchased, presumably by the investors that are currently in the deal. Are you guys taking those credits, or are you seeing a lot of transactions where you're opting for that partnership to actually transfer those out?
It's something we're in the middle of exploring right now. One of the great things about Impact Finance is we do a little bit of everything. We're in all the spaces. We're a heavy investor in the state tax credit space too. And so there's multiple executions on whether or not to do a partnership, to transfer, whether to hold the credit or syndicate the credit. And so we're exploring all avenues, and that transferability has the potential to be a game changer. And we got a lot of very smart people working on that right now, trying to figure out what piece of the overall puzzle that plays for us.
Very good.
Yep.
Thank you for that, VR. Just talking globally about the LIHTC equity market a little bit, it's been just so crazy. It seems like we say that every year. It's an unusual year, a different year. We had COVID, some slowdowns, interest rate rising, and so forth. We know investor yields are overall in the market are rising. Where's the market today? Is it slow? Is it robust? Maybe your perspective from U.S. Bank versus the larger perspective. Where do you see the LIHTC equity market today?
Yeah, it's hard to say what the overall market is, right? There are pockets and submarkets. I would say the market is very resilient, but it's also varied. As we've seen in the past, we're still seeing pretty high pricing and for certain deals in certain markets. Overall, we're probably paying on average in the mid 80s for a new transaction, but that really is just kind of the average of a lot of factors. And as with every other shock we've had in the past to this market, it just keeping on with a ton of great people kind of rallying to do new ideas and have creative structures and keep that housing built. But with every shock, it just seems deals get more expensive and longer timelines keep getting put on us. And so, the production slows down, but it keeps happening.
Yeah. Kind of almost a follow-up on that question, Vihar. Deals taking longer, deals struggling to close. What are you seeing? We'll talk about just a little bit of underwriting in a little bit, but just what is the slowdown? How are you getting deals to the closing table? I know you are, but what are the big struggles you're seeing right now to get to that closing table?
Yeah, no, it's a great question. It kind of depends on the day of the week. So we are on pace for a record year. So deals are happening. As I noted before, I think one of the unique aspects of the current situation we're in is we've had multiple different macroeconomic shocks, right? From interest rates to construction costs, and maybe we'll get to it later, but the insurance market kind of collapsing in on itself, natural disasters. So this is not a dystopian podcast by any stretch, but in the past, we've had to deal with one thing, right? It was tax reform or it was some other factor. And it seems like a lot of things have conspired all at once. And to go back to the previous answer, it's just been incredibly resilient. So every deal has some combination of those things happening. And for the last year and a half, those things were happening while a deal was being underwritten and closed. And so it was very, very hard to pivot. I think the new deals that are coming forth have considerations in place, right, to deal with extended construction timelines and interest rate shocks and higher budgets for insurance premiums and those types of things. So they're being put together a little bit more resiliently. And so their path to closing is more certain, though not 100%. And so we've changed the way we look at deals to contemplate that they may need to be re-underwritten halfway through underwriting, and they may need to be re-underwritten after they've closed sometimes to deal with some of these material shocks that hit them. And developers have rallied. I think the financing partners have rallied, and the investment and lending community has rallied as well. And we're getting stuff done. I think the downside, again, is it's taking longer and it's just expensive, right? So when we think about unit count, it's pressure against unit count.
Well, I was actually going to ask you about something positive, right? And you used the word dystopian. It feels like that over the last several years. But on a positive note, are you seeing any opportunities out there or maybe some new things in the market that might actually help with the current state that we're in?
I would say you take this overall kind of the doom loop narrative, and then you have to unpack it and realize that for each one of these deals that I talked about, there are victories there, right? There's more attention being paid to housing and affordable housing. Sometimes it's optics, sometimes it's real. at the political level. There are new financing sources. There are creative perm debt structures. There's attention through ESG and racial equity initiatives, which I know your firm and ours are really all in on, that are allowing people to just have more ingenious kind of solutions to move an individual transaction through. And that's kind of always been that scrappy nature of this space. On the macro side, we talked about some of the negatives, but we also have the Affordable Housing Credit Improvement Act continuing to get more and more political support, and hopefully it finds a vehicle to get passed. But I think that would bring a tremendous number of resources to this space. And then there are bigger things that we need to all work on from a policy perspective, NIMBYism, those types of things that I think generally curtail housing production in general, and specifically affordable housing as a country. And so those are things that we need to continue to fight against.
Very good. Vihar, I want to just touch on, and thank you, like you mentioned, U.S. Bank's been such a great partner to, we at Baker Tilly, us at Baker Tilly on our Develop initiative, working with underrepresented developers. Do you want to just touch on maybe a little bit what U.S. Bank or Impact Finance is working on in the racial equity space?
Yeah, I'll give it a housing bent. We're doing so much good work across. And I talked earlier about some of our repositioning really being catalyzed by leaning even further into that space. And so, there are probably two lanes. One is around the partnership and convening and education. And we have historically done workshops where we bring partners together and talk about anti-racist, anti-bias concepts and structures in the industry. We have taken great lengths to actually deploy capital in new ways by expanding our lens on what it means to be a developer and how you can underwrite somebody. And so we have gone and financed first deals with first-time developers by Black-owned and Black-led businesses. We continue to expand other spaces in different demographics as we continue to work across Latin sectors and Asian American Pacific Islander, Native, those types of areas. And these were binary decisions that were supported all the way up through the upper levels of our bank that just said, hey, listen, if we can put the right team together, we need to start doing things differently. And that's our ultimate goal, is to invest in land and influence capital in ways that help advance racial equity and build thriving communities. And we do that through all of our different tax credit functions and even outside of that at the bank level and impact finance. So we've done some amazing housing deals, but we're doing the same stuff in our new market space and CDFI space and environmental space, as well as a number of other areas of the bank.
Perfect. Thank you for that, Vihar. That was excellent. And maybe one last question for you, and it kind of gets back to, you had mentioned even earlier, we even are, re-underwriting deals after they close. And yeah, my question was going to touch on insurance and how do you know the quote this year, the quote's a 100% increase, interest rates now, hopefully we're almost at the top. There could be one or two more bumps. I mean, yeah, to your point, I assume you are re-underwriting and you're probably checking insurance, and we're seeing utility costs like water up 25%. It's like, yeah, how do you get comfortable that a lot of these utilities insurance are not moving and well, in fact, when you see them moving. So maybe just a little bit more on that underwriting sensitivity. Are you stressing deals any different way? Maybe you can jump on that.
Yeah, you're hitting it. It's the sensitivity is the key word, right? Is that you don't know what you don't know. And we really didn't know a couple of years ago coming into COVID and the things that have happened, the scale at which they would have happened. And I think this industry is full of a tremendous number of very, very smart people. And it's how we build in cushion so that people's risks are mitigated, but still allow a deal to move forward, right? And that's essentially the crux of a negotiation. When you're trying to structure a deal, determine a capital stack, get to the signature page on an LPA or a loan agreement, that's it. And so it's the sensitivity analysis and putting the stresses in. There's always something coming. We have headwinds on AMI increases based on new rulings. We've recasting budgets on higher insurance premiums and figuring out how our expense is going to work. And at some point, the capital stack breaks, and then you go back to the drawing board and you lean on the many parties that it takes to get this done. So we try to do what we can on the equity pricing and the loan pricing. We try to do what we can on terms. Sometimes you then need to call the state or the city or the county or a funder who has a housing directive with capital they have access to and say, hey, can you help us fill this gap so that we can put 100 units online for families that don't have clean, safe, affordable housing? And it seems like it gets done. It's harder and harder every day, but it's getting done. And like I said earlier, we just keep on keeping on and adapt as best as we can. And there's some lessons learned from this latest set of macro shocks that will put everyone back to the drawing board, and they'll come back in a slightly different, smarter way, and we'll keep going.
Very good.
Very good.
Well, that's it for this episode of the BuzzHouse. A big thanks to Vihar Sheth for joining us to cover various LIHTC market trends, what's going on in the market. So thanks you very much, Vihar. Appreciate that.
Yeah, thanks a lot for having me.
Very good. Once again, I'm Don Bernards.
And I'm Garrick Gibson.
Don't forget to subscribe so you don't miss an episode. For additional resources around multifamily housing, check out bakertilly.com. If you have a suggestion for the show, email us at build@bakertilly.com. That's BUILD @bakertilly.com. See you next time on BuzzHouse.